let's get you a wrap of all the market action today. And markets have snapped their winning streak to end the record-setting week lower. Sensex tumbled nearly 900 points. Nifty, which was nearing 20K, slid over 200 points to end below 19,800. Hiral Dadia with the wrap of all the market news.
A day of profit booking is what we've seen in the markets, mainly led by Infosys, which actually played sport on the back of the weak guidance that the company gave out post their Q1 numbers. We ended almost near the day's lowest level. Sensex saw a drop of almost around 750 points, whereas if you see Nifty 50, we ended below the 19,800 mark. If you see in terms of the outperformance, it was coming in mainly from the banking space, specifically the Nifty PSU Bank Index, which was the top gainer. And you had the Nifty Bank X, which outperformed the benchmark indices, though ended in the negative. Clearly, it was the IT index, which was the top loser, with Infosys leading the losses, with stock cuts to the tune of almost 9% in intraday trade. And that is something which actually impacted the other IT majors as well. If you see in terms of broader markets, it was the mid-cap as well as the small-cap index, which ended with a marginal change. Let's quickly look at the stocks which were the top gainers today. L&T on the back of the buyback as well as the dividend, meeting that has been announced saw some great traction. In fact, there was an order win as well. ONGC was up in trade, NTPC, SBI as well as BPCL were the other top gainers. On the losing end, as we mentioned, 3 of the top 5 Nifty losers came in from the IT pack, whereas HUL was under pressure on the back of a weak set of numbers, specifically on the volume side, where the volume growth was at least half of what the street was anticipating. RIL also was trading under pressure and saw some bit of profit booking. In fact, yesterday's session, there was some amount of longs that were being unwound. So clearly the pressure has continued in terms of the biggies. If you talk about earnings reaction, a spectacular number coming in from a JSW Steel, Ultratech Cement reacted to numbers, Hind Zinc, HDFC Life Insurance, Atul Limited, Glenmark. Then Tanla Platform saw a smart move on the back of a good set of numbers. Union Bank of India saw some good numbers. And you had an India Mart, which on the back of the buyback and earnings saw some smart moves. United Spirits also saw a good trade on the back of Q1 numbers. If you talk about the newsmakers, an interesting one was ICICI Bank. In fact, the stock hit a 4-digit mark. 1,000 rupees is what the company has crossed. In fact, analysts are of the opinion that it could be one of the contributors in terms of gains on Monday. Ramkrishna Forgings has approved an acquisition on the back of which we saw some moves. Utkarsh Small Finance Bank, an interesting one which listed at a premium of 60% to its IPO price. And you had Federal Bank and Aegon. Both of these were in focus on the back of news. So clearly, a day of stock-specific action is what we've seen, specifically from an earnings perspective. But clearly, it's the benchmark indices that have been trading under pressure, mainly leading on the back of the weakness that we've seen in the IT pack as a whole. That's all that we have on this session. Thank you, and back to you.
Now look at first quarter earnings. IT major Emphasis revenue dropped 3% sequentially but met the street's estimates. Margins remained flat and net profit dropped by 2%. Here's the CEO Nitin Rakesh on the company's first quarter numbers.
I think this was kind of the crescendo quarter for all the regional banking crisis that started late in calendar Q1. And in a way kind of started to get resolved through the remainder of the first half of the year. So I think all of that impact is showing up in quarter in the Q1 numbers. Good thing to note though is that our deal wins have been very strong. More importantly, we've started to see unlocking of the decision-making cycle that was kind of frozen for the past couple of quarters. Conversion from pipeline to TCV and TCV to revenue, while still not ideal, started to improve as well. We do believe that there are early signs of uptick on the mortgage side. We've started to see volume uptick over the last few weeks. And more importantly, we've also started to get client requests around capacity build-up in anticipation for improvement in that through the remainder of the year. So I think it's fair to say that Q1 was a base formation, a bottoming out quarter, and we expect growth to pick up through the remainder of FY24.
Persistent Systems has held on to its growth in these times of slowdown, but profitability has faltered. Revenue rose 2.95% over the previous 3 months. Margins contracted and profits fell. PQ Prime spoke to Sandeep Kalra of Persistent Systems. Listen in.
So it's not about the environment or not. We don't give forward-looking guidance. All I can say is we are at it. We have a track record of 13 plus quarters of sequential growth and profitability either at a stable or a healthy growth. There are quarters where there will be, a few things here, there. So we are relatively confident. The two other things that I want to point out for you and your viewers. We have not delayed any people joining. Whether it was the freshers that we took earlier, whether it will be the freshers that we'll take in the future. We have already gone ahead and given the salary hikes that were due to our employees. We are not going to manage our profitability by cutting the stomachs of our employees. We have given 7.5% average in India. We have given 3.5 to 4% depending on which geography we are talking about abroad. And look, all of that coupled with the fact that we paid 109% minimum corporate performance bonus for the last year, which was paid in the quarter gone by. We are confident of our performance. We'll stick it in come, a good macro or a bad macro. And we are poised to deliver relatively well in whatever environment is given to us.
Public sector lender Union Bank's April-June net profit rises due to higher core income and significantly lower provisions. The net interest income for the bank jumped 16.5% from a year ago. PQ Prime's Jaspreet Kalra speaks to the Executive Director S. Ramasubramanian regarding the outlook for the coming quarter. Listen in.
It is not a one time we are done this. This is over last 1 year. If you are looking at it, slowly we are strengthening our balance sheet with a little higher provisioning. Now, if you are looking at our PCR rates are more than 90% now. So we are in an effort to strengthen our balance sheet. We have been doing it consistently. Quarter on quarter, and this time also we see that when the things are happening very good and there is less stress in the actually speaking in the corporate sector, we try to see that what best we will be able to strengthen the balance sheet. That is the reason we have gone forward this.
Freshers, especially from Tier 2 and 3 colleges, are facing a difficult year. Fresher hiring contracted for the third straight month. Moreover, hiring for campuses dipped 7% in June. Pallavi Nahata with the details.
Are you fresher? Tough luck. Freshers, especially from Tier 2 and 3 colleges, are facing a difficult year after a strong placement season last year. Hiring for campuses continues to consolidate with a dip of 7% in June. This is according to job listing site Naukri. According to a report by the job portal, fresher hiring contracted for the third straight month, along with a dip in hiring for mid-level positions too. On the other hand, demand for senior professionals has soared. According to employment website Indeed, around 71% of employers surveyed have said that the job market is tough for new graduates. Only 4% believe that it's highly favorable for freshers. Freshers also aren't particularly optimistic. So what are the sectors that are contributing to this outlook? First and foremost is IT software. We saw record fresher hiring by top software companies last year because of demand for digital services spurred by the pandemic. A year later, fresher hiring in IT has seen the steepest decline across industries. It was 32% lower than a year ago. Other industries that saw a decline are FMCG, e-commerce and auto. It's not all gloom. The medical sector, hospitality, construction, oil and gas, insurance and banking saw a rise in fresher hiring from a year ago. Stay tuned to BQ Prime.